All right, welcome to The Explainer. Today we're digging into a true American icon, General Motors. We're going to break it down just like a pro analyst would to see if this industrial giant is actually a smart investment right now. And really, it all boils down to this one huge question. You look at GM, this company that's been around for over a century, and you have to ask, is its stock a historic bargain right now? Or is it a classic value trap, just waiting to spring on unsuspecting investors? So to put some numbers on that, check this out. GM's price-to-earnings ratio, its PE, is floating around 5x. Now, what does that actually mean? It means for every dollar of profit the company makes in a year, you're only paying $5. I mean, the rest of the market usually trades for, 15, 20 times earnings? A number this low is basically the market screaming that it has some serious doubts about GM's future.
Okay, so how do we figure this out? We're going to use a really simple 4-step framework that any analyst would use. We'll look at the business, the leadership, the competition, and then we'll make the final call. So let's dive right in.
First things first, what exactly is General Motors today? Because here's the thing, when you buy a piece of GM, you're not just getting one company. You're actually buying two totally different businesses that just happen to share the same name. Okay, so you look at where the money comes from. And at first glance, it seems pretty straightforward, right? 92% is just selling cars. But that's where it gets interesting. The real story isn't that they sell cars. It's which cars they're selling. And this is where you start to see the fundamental conflict at the heart of GM. See, on one side, you've got the legacy business. This is the GM we all know, right? Think Chevy Silverados, Tahoes, insanely profitable trucks and SUVs. This part of the company is an absolute cash cow. It's mature, it's dominant, and it's bankrolling everything else. But then you have the other GM, the high-stakes bet on the future. This is the electric vehicle and software side. It's losing money right now, it's soaking up billions in investment, but it's where the company believes its entire future lies. So you've got this company basically trying to do two completely different things at once. And that leads us to question number 2, the leadership. Is the team, led by CEO Mary Barra, making the right calls? Are they actually taking all that cash from the old business and putting it to work smartly in the new? And you gotta give them credit. Under Barra, management has been anything but passive. They've been pretty ruthless, actually. They cut loose on profitable divisions, they went all in on an electric future, and maybe most importantly, they've been betting big on their own stock. And I'm not kidding when I say all in. We're talking about a $35 billion bet on electric and autonomous vehicles through 2025. That is a massive number. That's not just testing the waters, that's jumping into the deep end of the pool. But here's the other side of that coin. At the same time they're betting on the future, they're also making a huge bet on the present, a $10 billion share buyback. There is no clear signal management can send. They're basically shouting from the rooftops that they think their own stock is an absolute steal right now. And this quote from Mary Barra just sums it all up, doesn't it? We have confidence in our capacity to fund growth while also returning capital to shareholders. In other words, we can use the truck money to pay for the EV future, and we can still take care of our investors. It's a heck of a balancing act. Okay, so smart strategy, decisive leadership, that's all great. But can they actually win? Can GM hold its own on what has to be one of the most brutal competitive battlefields in the world? In investing, the real key to winning over the long haul isn't just one good year. It's about having what they call an economic moat. Think of it like a real moat around a castle. It's some kind of sustainable advantage that keeps the competition from just storming your gates and taking your profits. And here's the kicker. According to analysts at Morningstar, GM doesn't have one. No moat. And what's really fascinating here is why. It's not because GM is small or their brands are weak, not at all. It's because the entire game is changing. I mean, look at this landscape. The car business has always been tough, but this is a whole other level. GM is fighting a war on multiple fronts. You've got the old guard, like Ford. You've got the undisputed king of EVs, Tesla. And now you've got this wave of new, hungry competitors, startups like Rivian and Lucid. Plus a flood of super efficient Chinese car makers like BYD that are just starting to go global.
The walls of that castle are being attacked from literally every direction. Okay, let's pull this all together. We have a company in a massive state of change, a sharp management team calling the shots, but no real defense against the competition. So where does that leave us? What's the final verdict here?
Well, it really boils down to two very different stories, a bull case and a bear case. The bulls will tell you that GM's old business is so profitable and management is so smart for buying back its cheap stock that it's a sure win. But the bears, they're worried that a recession or just the sheer force of competition will wipe out those profits before the whole EV thing ever has a chance to work.
And a good analyst is always going to lay out the risks, right? These are the big what ifs. What if this whole EV plan just doesn't work? What if the economy tanks? What about rising costs from labor contracts or new tariffs? Or what if there's a huge vehicle recall? Any one of these could completely throw a wrench in the works. But, and this is a really big but, even with all those risks baked in, here's the bottom line from the analysts. They see a pretty significant gap between where the stock is trading today and what they think it's actually worth. They're putting a fair value on it of around $77 when it's trading in the low 50s. That suggests that even with all the problems, it's still probably undervalued.
So this leaves us with the ultimate question, not just for GM, but for any investor. It looks like management is making all the right moves. They're running a smart playbook. But in a tech revolution like this one, is being right enough if you're not also first? Can they actually catch up to the competition, or is the race already over? And that, right there, is the multi-billion-dollar question.